Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. It is the season of IPO. State-owned steel company Mishra Dhatu Nigam, or Midhani as it is called, opens its initial public offering for subscription today. The government aims to raise about 440 crores from this IPO. Nigel joins in to give us more details on the company and its financials. Nigel, over to you.
Well, that's right. Midhani is the company that we're talking about. The IPO consists of around 4.8 crore shares approximately. The government is looking to sell roughly around 26% of its holding. And at the IPO price, well, the derived market capitalization will roughly be 1,650 crore rupees odd. Now, at the IPO price, what are the valuations? Well, it's valued at around 13.5 times. It's trailing EPS. Remember, it has no debt in its books. In fact, it has cash of more than 200 crores or thereabouts. The basic objective of this is for the government to sell stake and for them to fulfill the listing norms. What does the company do? They're into manufacturing of specialized steel. They're into manufacturing of super alloys, as well as one of the sole producers of titanium alloys in the country itself. In terms of their revenue breakup, well, the high dependence on the defense space as well as on the space sector, close to around 90% of their revenues coming from both these two spaces. The problem is they have only one manufacturing facility, but now they're looking at setting up a couple of more manufacturing facilities in other parts of the country. Their sole manufacturing facility is in Hyderabad. And over the last few years, well, on a CAGR basis, they've grown at around 9 to around 10%, holding with margins of around 20% or thereabouts. But if you're trying to extrapolate the first half of this year's numbers to the full year, that may not be the right way because they had conducted a maintenance shutdown. So the first half of this year was considerably weak, and that's why, in fact, they have done revenues of only around 208 crores or thereabouts. Risk factors then, a few of them. Top 5 customers contributing 65% of their business. Suppose there is a delay in setting up the other 2 units that I was talking about besides the Hyderabad unit. That's the second part. And they're always innovating in terms of new products. So that could be another risk as well going ahead. Back to you.
Okay. Nigel, no word on EPS and how it might, I mean, I don't know whom you will even compare it with, but any of the normal...
There is no peer comparison. There's no peer comparison. All the brokerage notes have said that.
Okay.
Yeah.
All right. Actually, we have the management with us, so let's check out if they can give us something more. Thank you very much, Nigel, for joining us. Dinesh Lekhi, Chairman and Managing Director of Midhani, now joins us. Good morning, Mr. Lekhi. Thanks much. But none of this money comes to you, right, for your expansion plans. This money goes to the government.
Yeah.
Okay. What are your own...
All the proceeds from this divestment will go to the Government of India.
Okay. What are your own capex plans?
No, apart from the what we had customer funded projects which we are doing currently of the plate mill, we are planning about 100 to 225 crore per annum for next 3 years. Our own capex plans are there for next 3 years.
Okay, 225 crores for the next 3 years. What kind of growth targets do you envisage for the company, Mr. Lekhi?
No. See, so far we have grown about 10% so top line and the bottom line. In futures, we feel that at least this and the better than this, because we are setting up 2 new facilities, one at Rohtak and one at Nellore. So with those things, our revenue should be higher than the 10% which we have in the past, and the bottom line also should be better than that.
Okay. You have 72% into defense. Is that where you can see good orders, because that seems to be the thrust area of the government?
See, we are primarily in the 3 sectors. So though dominantly we are in defense sectors, and we are expecting that more growth will come in the sectors as the sector is more and more Make in India program is happening. In addition, space launches are also increasing, so we are expecting the more growth in there. Energy sector also, nuclear as well as the thermal energy, the sector is growing. So we expect that the growth will come from there. Apart from that, we also are developing the oil and gas, which is now emerging, and some product we are developing for the railways also.
Okay. I just want, I mean, I don't know if you discussed this already, that your first half was lower because of that maintenance shutdown. So your full year, even in the current year, will be better than last year, that 10% you were talking about?
No, this financial year 18 will be not will be that high with the same growth, because we had taken a major shutdown, and in FY first half was lower. The second half we are trying to make up, so maybe that it will be range bound in the plus minus 5%. and will not be the growth.
Okay. You spoke about 2 facilities, one of them in Rohtak. By when will these facilities be up and about, and what can they do to your revenues?
See, in fact, we have put in Rohtak one unit where land has been acquired, equipments have been ordered. So FY19, somewhere middle, will start small production, and scale up will complete by FY19 end. This is primarily for the armoring business, where we will be making that bulletproof jackets, will be vehicle armoring, and as well as we will be doing the morchars for the paramilitary forces. At Nellore, we are trying to set up a tungsten powder plant and the closed die plant. Aluminium alloy, we are working on a detailed project report. Subject to the detailed project report, we'll be working on that project.
Okay. You have, I understand, 260 crore of cash. So for your expansion plans, will you need to take debt?
Yeah, in fact, we are in fact internal resources are sufficient for us, but since it is a zero debt company, for our expansion, if required, we'll be leveraging partly the company. But by and large, from internal resources which are available to us, we'll be doing our expansions.
Okay. You spoke about the defense orders that you have, but can you put some numbers to that? What exactly is the order visibility from the defense sector right now? What's the order book currently, and what can we expect over the next 1 year?
See, we have currently an order book which is in our account is about 520 crore already. We have booked it. What visibility is coming is more missiles orders are going to come to BDL or BEL, and that for that material supply has to be done because we are the tier 2 supplier. In addition, the new guns are being made by Ordnance Factory Board. We are the partner to supply the material for that. So these are and HL also, we are working on an engine material for them, Adu engine disc, and that material requirement will be there, and that order will be coming. Spaces also, about many launches are being planned, and those launches materials will be taken from us, that is steel as well as titanium alloy. So I feel that in next couple of months, about another 400-500 crore orders will be coming to us. With that, full year will be about 900 crore type of thing will be there for FY19.
Okay, I don't have your EPS handy. What is the FY17 EPS, and will FY18 be more or less the same?
FY18, FY17 will be more, EPS will be more or less same.
Okay,
Maybe plus
and
minus here and there,
that
but
is
it will
what,
more or
6
less
or 7 rupees, right?
Yeah.
Okay, Mr. Lekhi, thanks for stopping by and speaking to us. So that's the latest IPO. You know, it's a play on the defense space, right? Because they do supply to a lot of company making missiles, etc. He just spoke about that order from BEL, etc. So let's see how that works out.
Yeah, let's see how it works out, of course, from the government's table. But for the market, interesting, we are still holding at the opening highs, and advanced decline still sustained at 4:1. Ashwani Gujral, Mitesh Thakkar now join us. Ashwani, your thoughts on the market action right now? That zone of 10,180 to 200 has been a resistance, but the market's not falling from here, still sustaining that. How would you approach the rest of the day?
See, the bears are trying, one final time to see if, selling the gap works. I don't think it's working today. So while you are getting this bit of a dip, once we take out, 10,200, you may end up having a 150 point up day on the Nifty, maybe 450, 500 on the Bank Nifty. So I would think that 10,200 is now a matter of when and not if. Often, once this early selling is over, markets tend to move higher. Your stops have to be below 10,150. Obviously, if that starts to get taken out, then the story is over. But given this sort of strong opening, given what's happened till now in the last few days, it looks like it will sustain and possibly move higher. As far as individual stocks are concerned, India Bulls Housing is a buy with a stop of 1210, target of 1280. Canara Bank is a buy with a stop of 256, target of 272. And Adani Enterprises is a buy with a stop of 160, target of 172.
So Ashwani, are you adding to your Bank Nifty longs, or are you keeping your Bank Nifty longs for now?
Not only keeping but also adding, because the risk is lowest right now. When you don't want to hold positions and the market is not really moving like you would want it to move, you are at the bottom of a decline. That's when you should have your maximum position, So definitely I expect that today should be a good day and we'll have follow through.
Mitesh
Okay,
Thakkar and
Mitesh,
Sandeep Wagle are also here with us. So let's get some stock ideas from them as well. Mitesh, what are you looking at today?
Yeah, so I think on the Nifty I have a very similar outlook. Now that we are stabilizing above the 200 average and 10,200, which is somewhere the intraday averages are placed, I think once it's crossed, I think 10,320 should happen possibly in the next 1-2 sessions. So we'll trade with more positive bias. I have a buy on LNT with a stop at 1292 for targets of 1340, and M&M is a buy with a stop at 730 for targets of 770.
Okay. Mitesh, I want to ask you, Mindtree is, first of all, mid-cap IT, and in particular, Mindtree?
So Lata, I think what the stock has done is that in the last 6 months, it's given all green candles starting from 450, 460 odd rupees. I think now it's settling down. It's hit the support level or the lower end of the range at about 770, 760 odd zone. I think it should possibly do 850, 770 for some time before it again starts moving up.
Okay. Sandeep is with us in the studio. What are you trading, Sandeep?
I would go with a buy in a M&M Finance, stop loss of 441, target of 468, and a buy in a NIIT Tech, stop loss of 930, target 951.
Okay, fair point. So Ashwini, last one, since you're going for the day with long positions, what would be a good time or what would be a good dip to buy into, either for the Nifty or the Bank Nifty?
The dip that you are currently seeing, that should be bought, because once the horse leaves the stable, you won't be able to catch it.
Okay. Well, that point is taken. Let's keep tracking this. For now, it's still up about 70 odd points on the Nifty. It's stable so far. Let's see how the day progresses. Thanks, gentlemen, for joining us and giving us your views. Of course, globally, all eyes will be on Jerome Powell as he chairs his first Fed Reserve meeting. The two-day FOMC meeting will end later tonight. Market participants, as we know, are expecting a 25 basis points rate hike. But more importantly, we need to know whether there is a projection of 4 or 3 rate hikes for the rest of the year. Here is CNBC's Steve Leesman with the highlights of the CNBC Fed survey. We'll come back.
Let's take a look at what the market is looking for. Our 40 respondents, 100% think there's going to be a rate hike announced tomorrow. 83%, maybe even more importantly, see that second hike coming at the next press conference in June. The median forecaster in our survey sees 3 hikes this year and 2 in 2019. That's not interesting. What is interesting is the next chart that shows you where the risks are. This is a distribution of our responses. So 21 see 3 rate hikes. You can see that here. But all the risk, everybody else who's not at 3, they're at more rate hikes. So a bunch, the second number, 18, are at 4. And you can see there's no risk seen over here. Nobody's betting on 0. Nobody's betting on 1. It's all 3, 4, or 5. You can see that, by the way, when you look at the outlook for the 10-year yield. That goes up. Over here, 285 is the current rate. It's really 290 today, but we didn't change the chart. 317, in other words, we're over 3% by the end of this year, and then 3.5% by 2019. And now another interesting development. Over the course of our surveys, time after time, they have raised their outlook for the S&P. This is the first time since July that for 2018, they've brought it down. Still not a bad outlook, 4% from the current level for this year, 8% by the end of 2019. I'll take that in the current environment. One concern, though, it's not even the Fed. The biggest concern is trade. It tops the list of threats to the expansion. And on trade, 63% say that the president's trade policies are negative for the U.S. economy. 81% say an exit from NAFTA is a bad idea. 75% are concerned about a trade war. And about half, which is a plurality here, say that these steel and aluminum tariffs will cost jobs. And we'll be waiting for that statement tomorrow and see how Jay Powell steers the market towards 3 or 4. I don't suspect, Wolf, it'll be 5.
Okay, do remember to catch the live coverage of the Fed decision only on CNBC TV18. Well, this market is really soaring now, up almost 270 points on the Sensex. And look at the Nifty, it's almost inching towards a century now. Let's
10,200 is here. I mean, if it's psychologically a prop, that has been reached.
No, so 10,180 to 200 was the resistance zone. So obviously it respected that. It didn't fall from there. And after that, you saw that.
Conquered it.
And of course, Ashwini said that you can buy even right now, and after that you saw that big move. Advanced decline is strong today. That's a good part for the bulls. 4:1, of course.
Okay, well, we cut Sonia short when she was saying that On this note, hear out Shakti Shiva of Credit Suisse yet again. That brokerage, of course, is underweight on India.
We're still underweight at this point in time. I mean, the reason for being underweight, as you know, are firstly valuations and secondly earnings revisions. So on valuations, India has been in what we call the expensive four club, which is the four most overvalued markets in the region. The premium has been above 50%, while the valuations have improved. At this point, probably not enough for us to upgrade our recommendation. We define capitulation as foreigners being net sellers on a rolling 12 months. At the moment, that number is now 0, so we have not yet gotten to negative. So we will also get more excited, both about India as well as the region, if that number goes negative. The last time we had foreign investor capitulation was actually 2 years ago in January of 2016, and we made a big buy call at that time. At this point, as I said, we are still at 0, but if we do get a bit more foreign selling, we actually would officially be in capitulation territory. Now, some markets are already in capitulation territory, markets like Taiwan, even Japan. India is still on a rolling 12 months basis, still at a positive number at this point. Our positioning has not changed much. So we like IT as well as metal, so more in the cyclical sector. So we do like HCL Tech on the IT space, and actually we still also continue to like Hindalco. India has had almost 3 to 4 years, consecutive years of earnings downgrades, whereas the rest of the region has seen certainly quite strong earnings upgrades last year, and even this year the revisions are flat. So India is still trailing the other markets in terms of earnings revisions. If we do get 3 or 4 hikes, that takes us to a positive real Fed funds rate of around 1%. But historically, the rallies or the bull market, as I call it, has ended when the real Fed funds rate is north of 2.5%. So we still have room. So our view is what the Fed is doing at the moment is still taking their foot off the accelerator. Policy has been very easy, and they are removing some of that accommodation. What we worry about is when the Fed starts to break, and that to me is when the real Fed funds rate is more than 2.5. To see that, we need more signs on inflation. So far, inflation, while there are some signs of it picking up, it's still fairly well behaved at about 1.5%. If you look at some of these export-driven markets, you're paying around 1 times book. India, even with the pullback, you're still paying about 2.7, 2.8 times book, so you're paying still a much higher valuation multiple for some of these markets that are more domestic. The other concern that we have on these domestic markets is all 3 of them, India, Indonesia and the Philippines, are running current account deficits. All the export-driven markets are actually running current account surpluses. So, you have equities, but you also have the currency, and we look at US dollar returns. So our concern is even if the stock market goes up, if you lose it on the currency, it's still a poor return from a foreign investor perspective.
Okay, that's the word coming in from Shakti Shiva. The moot point was that although they are still underweight on India because of valuations, they are advising a buy on dips. And the market today is a sight to sore eyes, definitely. 300 points higher now on the Sensex, getting better by the minute. Manisha Gupta joins in to give us a quick roundup of all that's happening in the commodity and currency space as well. Manisha, as good?
Well, not as good, and we have seen actually profit taking in most of these commodities, especially for the crude oil prices. Well, that is the only green spot on your screens. 2.5% gains overnight, and we are trading on a firmer note right now. It's a 3-month highs as we see that trading. There is a decline in US inventories. You have seen concerns on output in Venezuela, and there are tensions brimming yet again between Iran and Saudi Arabia, and that seems to be adding premium to prices. So a 3-month highs in crude oil prices, but the rest, everything else in commodities actually is trading slightly on the weaker side. There is strength in US dollar. There is also strength in global equity markets, and that seems to have pulled down the gold and silver prices. Slightly steady in the international markets, and that's the cues that we're trading in for the Indian space here. Having said that, you are looking at silver prices trading at a 3-month lows, and the gold prices as well have been testing near their 200 days moving average, so very close to their support levels as we trade in the global markets there. If you look at the base metal prices, well, there is a bit of a pause after the kind of sell-off that we have seen in last couple of days. But even with that, you have the copper prices trading at a 3-month lows. The iron ore and the steel prices are trading at a 4-month lows right now. These markets, of course, would watch out for the demand strength that is expected to be higher going forward. But at this point in time, with the global trade fears, the interest rate hike coming in from US, that would continue to weigh onto those markets. Trading strategies, we have them from Angel Commodities. They have a buy call coming in for the crude oil prices, where we already have seen some strength come in. They are looking at targets of 4,200 on the higher side for today. In the metal space, they expect some more profit taking, especially for zinc. They're looking at a sell with a target of 207 for the intraday today.
All right. Thank you very much for those strategies as well, Manisha.